We now travel again, this time to India, for our next speaker, Abhishant Pant. Abhishant's a founder of the Fintech Meetup, which is India's largest fintech ecosystem. He's advocated for fintech as a transformative force for development and financial inclusion. He was part of the founding team at M-Pesa India and is a renowned expert and advisor to both companies and governments in the payments arena. He's famous for the cashless journey he took to document and popularize early fintech advances in India. We are so lucky to have you here, Abhishant. Welcome.
Thanks a lot. I'll straight away come to the point, and it is extremely exciting to hear Brazil first, and then get into this conversation. So it is great to have that conversation as a starter to this. India fintech opportunity, if you look at it from the point of view of its totality, is a journey that started, I'll say, sometime in late 90s. That's when the first set of fintech startups came into existence into India. Now, while I'll get into the details of the session, I'll give a brief view of the ecosystem and all. I thought that I'll give a brief on the agenda that we'll follow. We'll have a small introduction of who we are, then an overview of Indian fintech landscape. There are a few key themes that I wish to talk about, and the US-India fintech bridge that we are trying to build, and some closing remarks. So who we are, the Fintech Meetup, we are India's largest fintech ecosystem. What do I mean when I say largest? It means that if you can think of a founder in India in fintech as a space, we'll know the founder. More importantly, they will also know us. If you can think of venture in India, we'll know them, they will know us. And we essentially work with large value chains across India. That's what essentially makes us the largest in the ecosystem. Who am I? A brief about me is already given. If anyone wishes to connect, they can do so on LinkedIn. My name is Abhishant Pant. I started my journey in fintech around 15 years back and is associated with now the venture fund via which we essentially invest in early stage fintech opportunities. That's what we do. We have a very unique way of investing in the opportunities. You can think of it as a combination between what America's Got Talent, and then if you combine that with Y Combinator, and if you add the nuances of Techstars, that's what you get. Unlike anybody else, we essentially undertake a 10,000 kilometers road journey of India every year in search of fintech innovation. We have done that 7 times over, which means that I have traveled India 7 times over in last 7 years. In totality, spending 400 days of my life on the road in search of fintech innovation. So that's about us and what the ecosystem that we have built over the period of time. I'll specifically come to now India fintech ecosystem. So India fintech ecosystem essentially, as I said, started sometime in late 90s. It was in 1999 when first set of fintechs came into existence. They were payment gateways, they were loan aggregators, web aggregators from a digital loans point of view. And that's how these journeys started. The first phase of Indian fintech was somewhere between 99 to 2007. That's when the web aggregators came into existence. The second phase started in 2011-12 to 2015-16. This was the phase when essentially the wallet companies grew. We had Paytm, we had MobiKwik, and a few others who essentially built digital wallets, and they were, you can say, a precursor to what was going to get built in form of UPI. It is from 2017 onwards is when the large scale change started happening. And today, essentially, the UPI rails are well known, just the way you have heard about Pix. I'll not get into the details of UPI at this point of time. It's a real-time payments rail, which essentially at this point of time processes around 17 billion transactions. Overall, this year till date, it has processed around 165 billion transactions and $2.6 trillion of value. That's what it has processed. This digitization essentially has meant that there is a consistent and ongoing growth in the overall value chain. Where does it stand? At this point of time, India has close to 7,000 plus startups. Overall, the valuation and the market size of it stands at around $111 billion. The ecosystem is third largest in the world. In terms of real-time payments, India has the largest ecosystem in the world in form of real-time payments. The ecosystem of fintech in India is largely concentrated in 6 cities, which is Mumbai, Delhi, Bangalore, Pune, Hyderabad, and Chennai. These are the places wherein you will find 95% of Indian startups in fintech as a space. The largest piece, which essentially kind of has disrupted everything, is the digital payment rails. Digital payment rails have then, over the period of time, led to digital footprint creation. And this digital footprint creation, which has happened over the period of last 7, 8 years, has led to a situation that today an Indian can get access to credit by just simply downloading an app and providing some details. Everything happens online, everything happens digitally, and you can get credit anywhere in the range of as low as $20 to as high as say $1,000. All of that you can get in less than 5 minutes time. All of it happens from a digital value chain point of view. The credit access goes, frankly, even as low as 1/10 of a dollar. And all of this is possible because of the fact that there is a lot of digital footprint that got created because of the UPI rails that came into existence. So that's where essentially the journey essentially has gone from an India lens point of view. It happens in any geography, in any market, the first stage is where payment rails kick in. If you see from a US point of view, it was 90s when PayPal came into existence and gave people confidence to essentially use their digital accounts online to buy commerce. If you look at Kenya, it's exactly the same role. M-Pesa paid in Kenya and essentially led to the evolution of Kenyan journey, and so on and so forth. The same piece applies from the point of view of China. So it is a combination of digital payment rails and essentially something somewhere on the line, commerce essentially becomes the other enabler. And when two of them come together, over the period of time, the digital footprint generated by them leads to essentially next set of new to credit borrowers who can come into the market, which essentially largely happens driven by the data which gets generated because of these people. That's how essentially it goes from a journey point of view. The second stage of India's journey from the point of view of credit essentially started sometime in 2024. Sorry, 2014. 2014 is when the first set of consumer lending startups as well as the SME lending startups came into existence. The first set of consumer lending startups are now in a matured space to such an extent that the digital lending startups in India now do more of consumer credit than the traditional banks in India. Same is the case in India from the point of view of digital payments. So the startups and fintechs do more of digital payments in India than all of the banks put together. So frankly, at least from an India market point of view, the startups and fintechs have totally disrupted the payments market. The startups and fintechs have frankly disrupted the digital lending market as well. There comes then the third piece, which normally becomes part of the journey, is when insurance kicks in. The insurtech startups are fairly nascent in the journey at this point of time. Insurance penetration overall, from an economy point of view, still continues to be low. So it's a reflection of that. And I think it is exactly the same in most of the other markets as well. The fourth part of the journey, which essentially somewhere kicks in once you have enough and more people who are on the credit journey as well, is when wealth focused startups start coming into existence. At least at this point of time, what we see from a grounds up perspective is that the largest, if I look at it from the point of view of numbers, the largest number of startups in India belong to wealth as a space, because it is divided into advisory and sales in two different aspects. So wealth is a key segment from an India market point of view. It is largest in terms of number of startups in that. After that comes the credit space. After that is the payment space from the point of view of the number of startups essentially which are out there. Insurance has the least number of startups which are out there. As you possibly know from the point of view of market, India is not just frankly speaking one country in many ways. It has multiple markets which exist in it at all point of time. India has a population which has possibly the similar kind of a wealth, a percentage of population which has similar kind of a wealth as Singapore and Hong Kong. And then there is a population which essentially has the similar kind of a wealth as European economies. And then there is a population which is like Asian economies, some of the tiger economies of Asia of 90s, if you recall, and also has a sub-Saharan Africa which exists in it. So therefore, from the point of view of fintech as well, solutions are getting built which cater to all of these segments. Different segments have different needs, and the segment which is in the sub-Saharan Africa kind of economic value chain or per capita income. For that segment, the solutions are largely assisted models which are getting built and they can deployed at scale. The government essentially has pushed a lot from the point of view of something which is now popularly known as digital public infra. In India, one of the piece that we have seen is that the at least the last decade suggests that government has played an extremely active role in building digital infra brick by brick, stack by stack. So today you have a full stack digital infra which is available from the point of view of identity, full stack infra in form of payments. Slowly the same is getting built from the point of view of credit and insurance as well. So it is a very, very unique approach in terms of building these digital properties, which also means that India may not have a plaid kind of an organization because of the fact that US is an innovations first market, while India is a mix of regulations and innovation, and government playing a very, very active role in innovation. In India, the government will build a highway and will say that you can drive the car that you want, and that's essentially to say that government becomes a very, very active participant in the journey of building digital economy as such. So that's what that's where essentially the difference in what India does and what has happened in many other markets. So from the point of view of this digital public infra, anybody essentially who gets to create the digital footprint can get access to credit, can have sachet insurance. As insurance, again, sachetized insurance, say every time I take a train in India, I can get a sachetized insurance for that journey for just 49 paisa. And all of that essentially happens just by a click of a radio button. What does that mean, 49 paisa? 49 paisa from a current forex markup point of view is less than half of a cent. That's the kind of efficiency to which it has gone, which means that I can buy a travel insurance which is less than half a cent, and I can undertake a train journey. And for all of that, API integration and everything is in place end to end. That's what essentially the build of a large scale digital infra does. That's what multiple other opportunities which came from the point of view of ecosystem does. And the good part is that because of the integration of a lot of senior tech founders into the value chain, it led to creation of this infra. Nandan Nilekani, who is the co-founder of Infosys, is the driving force behind much of this. There's another gentleman called Amit Ranjan, who was founder of SlideShare. SlideShare got sold to LinkedIn in 2011 for $111 million. And SlideShare, essentially, the SlideShare founder went on and joined Indian government sometime in 2015-16 to build DigiLocker, which is essentially the place wherein you can place your identity and other documents as such. And all so much of what we see in form of digital infra and all is built with a very, very strong public and government partnership, wherein the senior tech professionals came in, built all of that. That's where essentially much of what you see from the point of view of change has come. So it's a the Indian digital public infra build is a extremely good example of how essentially government and civil society and public at large can work with each other for creation of this. And the best part is that while it got started in 2009 10 in the earlier government era, the current government, essentially current dispensation, continued and kept on building on top of that by bringing in more and more solutions and the possible value chain that's getting built on top of that. We talked about some of the pieces on domain already, which is we talked about payments and credit. Data is another piece which, as I said, is getting built at this point of time. If I wish to know my uh, my liability balance in all accounts, if I wish to know what are the assets which are out there, and if I wish to know what all fee products I have, the data solution that essentially is getting built in form of account aggregator as a value chain encompasses it all, and I just need to provide one single consent to get to know my account balance across all banks, to get to know all my fee products, and to get to know all the credit I have from all places. All of that is done via single consent. So just think of the fact that you get to know your Chase, your Monzo, your Wells Fargo balances, and you get to see all your credit, all your insurance, and all your mutual fund investments, and every single damn thing on one single place. That's what the data evolution or data revolution from an India market point of view is achieving, which is it is helping the consumers become data rich in the journey that has got undertaken over the period of time. And it's not just the data which comes out of bureau or the FICO scores. Essentially, it's a much richer data and much more consistent and the ongoing and the present data versus what you see in form of scores, which is a bit dated data set which comes from there. Uh, from a conclusion point of view, at this point of time, as I said, India represents the third largest fintech market in the world. It essentially is a thriving ecosystem. As I said, there are close to 7,000 odd startups. What is it which India at this point of time needs more of it? It needs more of risk capital. And that's the reason why I, along with few other founders, we are traveling across the length and breadth of US for next 70 days plus. I'm here in US till 30th of April. And in this period, we will travel approximately 3,500 miles of US across the East and West Coast to essentially meet up with fintech founders, what is getting built on AI, with venture investors, and in turn trying to essentially assimilate what can we do to create a India-US fintech bridge, which essentially helps in connection of the risk capital which US brings and some of the innovations that come out of India as a market. If any one of you who is listening to this and would love to connect with us, look forward to connect with you and share more of what is the India fintech journey all about, what kind of opportunities one can explore, and what are the risks associated with that. With that, I essentially complete my submission on India fintech opportunity. I'm thankful to Kathleen, Liz, and Ruby, and everyone else who gave this opportunity to speak to each one of you. Thanks a lot.
Abhishant, that was a fantastic tour through a very innovative space. And thank you for shedding light on what's become a really successful feedback loop in Indian innovation. And very much good luck on your journey. And we're really honored to be at the very start of that. Thank you.
Thank you. Thank you, Kathleen. Thank you, Liz.
One of my favorite moments in this conference actually is the chance to showcase some of our future fintech leaders, the MBA students at Stern. And it's now my great pleasure to introduce the co-heads of Stern's MBA FinTech Club, Santiago Berdigue and Amalia Nasser. They're going to tell you a little bit about their organization, and they'll also introduce our next and final speaker. Take it away.
Hello, everyone. Thank you, Professor DeRose. First of all, I want to thank the entire team behind the FinTech conference for making this event possible. It's a pleasure to be here. And a brief introduction. As Professor DeRose already mentioned, my name is Santiago Verdeguer. I'm a second-year MBA student at NYU Stern. And alongside Amalia Nusser, I lead the Fintech Association, FTA, for the graduate programs. So this encompasses programs outside of the full-time MBA and basically everything across the board for Stern. FTA is a student-run organization. We have an incredible board comprised of students from the full-time Langon program, Tech MBA. So really, it's just very diverse, and this brings in a huge amount of knowledge and expertise across different spaces within the fintech sector, but also geographically, right? So we have representation from most continents in the world, and that just brings in great variety of points of view. Our mission within FTA is to provide resources through workshops, treks, guest speakers, alumni networking events, and more. And our goal is to build a strong community and supportive community for the students. This is in order to help them expand their knowledge with all things related to fintech. So like I mentioned, mission to provide resources, our goal to build a strong and supportive community. And our club currently has more than 150 active members across all MBA programs. These are members that have been active either from the past year or from the Langon students who have been active for a couple of years. Our goals are implemented through three specific pillars, which are awareness and education, events, and recruiting. Within awareness and education, our main line of communication is our weekly newsletter, which includes fintech news, resources such as article and podcast, as well as updates on club activities. Within events, really, while this is a vertical on and by itself, it acts more as support for both education and recruiting. And what we do in events is, and what we have done in the past year, is we brought in AI experts within the fintech sector specific to investments. These type of firms have actually become opportunities for students to have in-semester internships. We've also structured boot camps for those students who are pivoting into the fintech sector and who don't have a very concrete idea what the fintech space is like. So this boot camp helps us to kind of level the playing field. We're also structuring an event next month with some incredible entrepreneurs who started a finance education platform, and it just had exponential growth in the past couple of years. So we're very excited for that. And yeah, these are some of the events that we as a club have. We also have the social aspect, which is, basically to help build a community within the club. We know how important that is, not just during the MBA, but post MBA experience. So we're very careful about cultivating those relationships. And finally, recruiting. As FTA, we share internship and full-time opportunities within fintech. We work very closely with different departments within NYU to provide the most up-to-date information regarding that. We connect interested firms directly with students. So we had a large number of firms reach out to us, and we like to connect them with the community. And I think this is a great advantage that we have being part of NYU, is that we work alongside other clubs. An example of them being the Stern Technology Association. There's always overlap between technology and fintech, so they've always been a great source of support, and I hope we have been as well. And yeah, that's pretty much the breakdown of what we do as the Fintech Association.